What's going on, everybody? My name is Zach Hartley and welcome back to the channel. In this video, we're going to do a deep dive on NVIDIA. The company just surpassed Microsoft to become the second largest publicly traded company in the world. And so in this video, we're going to talk about whether or not NVIDIA is worth the valuation, how the company is doing, and what the stock chart looks like. Let's dive right in. Okay, so NVIDIA trades on the NASDAQ under the ticker symbol NVDA. They're headquartered in Santa Clara, California, and the current price as I make this video is $134.79, giving them a massive market cap or valuation of $3.3 trillion. Now the website is NVIDIA.com. This is what their logo looks like, and the business model is fairly simple. They design and develop semiconductor products. When I say semiconductor products, I am primarily talking about the chips that go in your smart devices like your computers, your laptops, your iPhones, whatever it might be. NVIDIA more than likely had something to do with the chips that are actually inside that device, and they more than likely designed and developed those chips. Now, their business model is all about design and development. They actually outsource all of the manufacturing to other companies, primarily TSMC and Samsung, and their products, primarily in the data center space and even a little bit in the graphic space, are absolutely massive for the AI boom that we're going through right now. There is huge demand for NVIDIA products to learn large language models and to train these different AIs and to build these products and then to run these products as well. ChatGPT runs primarily on NVIDIA products, and so this is something that is super important to what is happening right now. Now in this video, I'm going to use Moomoo to demonstrate all of the analysis that you need to know about NVIDIA. Moomoo is my go-to brokerage platform lately. It currently ranks #1 on TradingView and offers powerful free analysis tools that meet my needs with trading fees that are 90% cheaper than other platforms. They're a NASDAQ listed company with 23 million users globally, and they recently entered Canada as a CIRO registered brokerage, establishing a strategic partnership with the Toronto Stock Exchange. I've been trying it for a little while and I found it quite impressive, which is why I'm going to be using it for this analysis. Now, to get us started here, let's just take a quick look at the stock chart, and it is very positive. As you can see back here, we had some resistance where we had a double top here, we got rejected, we came up to that same level of resistance right here around $95, almost $100, and then we gapped up, we broke through it and established a new all-time high. And since then, we've been trading in a little bit of a descending wedge. You can see that we have 4 consecutive lower highs, and we also have basically 2 double bottoms right here where we were basically at the exact same level that rejected us earlier in the year. And so that level of resistance has now acted as support. We have bounced off of that support. We have also broken out of our bearish trend line, and we have crossed above our moving averages, and things are looking very good for NVIDIA. We are approaching previous all-time highs. We've got a change in trend right now, and this is looking like a great time to be buying into NVIDIA. Now, if you're interested in trying out Moomoo, they have great new user benefits with a cash reward of up to $4,500, but I'll explain more about that at the end of the video. Now, let's dive into the financials here. The first thing you'll need to do is go to the Moomoo website here. I will link it in the description down below, and then you want to type in and search for NVIDIA. It'll pop up right away here, and what we're going to do now is first just dive into the financials, because there's a couple of really important things that I want to show you about NVIDIA. So the first thing that I want to point out here is just how their revenue has grown year over year since 2018. They started at $9.7 billion and then had 2 kind of flat years around $11 and $10 billion, and then it went 16, 26, 26, $60 billion. That is how big of an impact AI has had on the demand for NVIDIA products. Their revenue has doubled between 2023 and 2024 from $26.9 billion to over $60 billion, which is absolutely insane. And that is a massive growth rate for a company that is one of the largest in the world. And so it is extremely impressive. And then the best part of all of this here is that their gross profit is absolutely insane. It is close to 75%. On $60 billion in revenue, they generated $44.3 billion in gross profit, and their operating profit was $32 billion. So they generated over a 50% operating profit which in the world of mega cap, large publicly traded companies is absolutely unheard of. Now, at the end of the day, their income before tax came into $33 billion compared to $4 billion last year and $9 billion the year before that. And so this is an absolute money printing machine. The company is extremely profitable, they're growing extremely quickly, and they're doing extremely well. And when you look at the balance sheet, it is also extremely healthy. We're gonna take off year over year, we're gonna look at just the annual here, and when you look at their current assets of everything that they have, total current assets of $44.3 billion compared to, total current assets of $44.3 billion compared to their total current liabilities of just 10.6, they have a 4x, a more than 4x ratio of their current assets to current liabilities. And so they are in a very healthy position. They have lots of cash. They're not worried about it at all. And on top of that, they are printing money by generating so much net income on a monthly and quarterly basis. And so very impressive company from a financial perspective. And now here's the fun part. If you don't like looking at all of the just raw numbers data, Moomoo has done a really good job of visualizing all of the data to give you a better understanding of what you are looking at. For example, we can see all of their EBITDA, earnings per share, or revenue broken down as a chart over time. We can also look at their revenue breakdown to see what industries that money is coming from or what geographic areas is bringing in the most revenue. We can also look at their business data to see their operating income on a visual chart so that we can see the growth over time and we compare it over a long time horizon. And so Moomoo has done a really good job at organizing all of that and making it very easy for us to understand as a user. Now, when it comes to Moomoo, there's a couple of other features that I really like and I have enjoyed that make it different than a lot of the other platforms that I've seen here in Canada. The number one thing, and one of the best parts of it for me, is that it has free level 2 data. This is data that I was paying almost $100 a month for with my other brokerage, but Moomoo offers it completely for free, and it allows you to see all of the orders that are built up on the buy and the sell side, as well as the orders as they execute. And so as a trader and investor, it gives you more information to see what is actually happening with that security. The other thing that I like about Moomoo is it has totally free commissions. So it's kind of like you're getting the best of both worlds here. You're getting the advanced trading features, but you're also getting those free commissions that a lot of the low-cost providers are giving you. On top of that, if you are new to trading and you're just getting started, they also have a paper trading account and advanced charting features. So if you're just getting started, you want to focus on technical analysis, their charts have all the features that you need, and their accounts can get you going without risking your real money in the beginning. They also offer extended trading hours and access to global markets. So depending on what you want to trade, Moomoo might have it where other platforms won't. On top of that, they also have the ability to give you a TFSA or a margin account, and they have tons of research tools, some of which I'm covering in this video, but there are a whole lot more on both their desktop, their mobile, and their website platform that are super useful. So it's going to take you a little while to learn it, but it is well worth it. Okay, now for this next section here, I'm actually going to be using the Moomoo mobile app because I really like the user interface and I just want to show you some of the features. So first thing you're going to do is you're going to find NVIDIA stock. You're just going to search it up the same way we did on the desktop here. And then you're going to scroll down here and you're actually going to come down to the company valuation under the company profile page here. And you can see that the price to earnings valuation here is 62.92. What that means is that the value of the company is 62.9 times the earnings that it is bringing in. And so every share that you buy, you are paying 62 times the earnings that that share is entitled to. Now, in general, the S&P 500 usually trades between a price to earnings ratio of 14 and 21, meaning the exact same thing, that your share is priced at 14 to 21 times the earnings that it is entitled to. NVIDIA is at 62. What that means is that it is extremely expensive. It is very sought after. There's a lot of demand for the stock, and because of that, the price has gone up so high that it has driven up the price to earnings ratio to the point that it is now in the 60s, and you're paying 60 times what that stock is earning you on an annual basis. Now, that money that it is earning is not directly going to you. It is staying within the company because they're not paying out a huge dividend, which we're going to talk about in just 1 second here. But from a valuation perspective, is NVIDIA cheap or is NVIDIA expensive? By looking at this ratio alone, we can say NVIDIA is extremely expensive. Now, why is it so expensive? Well, it's so expensive because of the things that I just showed you. The company is growing extremely fast. They have a very, very strong balance sheet, and they generate a very, very large amount of profit on the revenue that they are bringing in. And so this is a very desirable company for people to hold in their portfolio, which means a lot of people have wanted to hold it in their portfolio, which has driven up the price. And now we are sitting at a price to earnings ratio in the 60s, which again means that this company is very expensive. Now, does it mean that it's a bad deal or a bad investment? No, not at all. It just means that relative to a lot of other stocks in the market, the earnings that you are generating from this company are very low in comparison right now. But because this company is growing faster, it means that those earnings are likely going to grow faster, and it might be an amazing investment 1, 2, 3 years from now, especially if this growth rate continues. And so what you need to think about is, does this company meet my investing philosophy and my goals, and does it have a place within my portfolio given the risk to return ratio that we are looking at? Now, when it comes to this type of company, this is going to be a growth company. They're probably not going to turn around and spit out a massive dividend because they're going to invest it into growth and new facilities and new employees and developing the next product. But they do pay a small dividend. So I just want to scroll down here so that you can see it and we can actually kind of look at it together here. And again, great visualizations. Moomoo shows you all of the information you can see here. But when we scroll down here to the dividend, you can see that the dividend yield in the trailing 12 months, which is how much of a dividend the company has paid over the last 12 months, is 0.02%. And so you are not earning a significant amount of cash flow from this stock. You are looking for the price and the value of this stock to appreciate over time so that you can get some capital gains. This is not going to be an immediately cash flowing company. However, because they make so much profit and so much cash, they may decide to either increase that dividend over time or to issue a special one-time dividend at any point. Those are things that can happen, but they aren't things that you should rely on. And so that is something to consider as you evaluate this company. Okay, now when it comes to analyst ratings, everybody is still extremely positive on this stock with a maximum analyst rating of $200 and a minimum of 135, which means the minimum analyst rating is actually where the stock is at right now, which is super, super positive again. And so all of the professionals also like this company, again, for the reasons that I pointed out to you. Now, here are my final thoughts. Number one, this company has amazing growth and profitability. The stock chart also looks absolutely fantastic right now. It's actively breaking out as I make this video, and the income statement and the balance sheet both look absolutely amazing. This company is healthy. They're going to be here for a long time. They generate lots of cash, and they're in an industry that is absolutely booming. The problem is that the valuation is expensive. And so what you need to do is decide, is the value worth the price? I can't make that decision for you. That is something that you have to decide on your own. But if you want help with it, Moomoo can help you out, and they have a huge welcome bonus that you should hear about. First of all, when you sign up, you will get $2,000 in commission rebates for the first 90 days. This means that 3 months of trading will be commission free. Now, like I said, a lot of the commissions are already free on Moomoo, but depending on what you trade, sometimes there are commissions. And when you deposit $100, you will also receive a $50 stock cash bonus, $200 stock cash bonus if you deposit $2,000, and that's the amount of cash that they will rebate to your account when you buy stocks. Now, that's not all. They are offering a limited time 6% APY for $10,000, and that's $100 of passive income. If you transfer your assets to Moomoo, you can also earn up to $2,300 Canadian in cash or receive an equivalent Apple gift card as well. I will put links with all of the details to this in the description to the video down below. And that is it for this video. Thank you guys so much for watching. Thank you to Moomoo for all of the help, and we will see you guys in the next video. Good luck trading, good luck investing, and we'll talk to you soon.